good afternoon and welcome to our members and to our guests. For those of you who don't know me, I'm Alex Matos, the Executive Director at ANSHAM Taipei. We're really excited today to have this event looking at the economic impact of COVID-19 on Taiwan and on the region. While it's really important to note that Taiwan's done a really great job in preventing the spread of the virus locally, what's been happening in the region and globally has definitely had a strong impact on businesses in Taiwan. So it's really important to keep monitoring the situation. Before we begin, just some housekeeping. Please keep your microphone on mute. And if you have any questions, please use the Q&A form that was provided to you in the email. I'd like to thank ANZ, of course, for the help organizing today's event, and pass it directly on to Mr. Khoon Goh, the Head of Research Asia, to start the presentation. Let me just...
Thank you very much, Alex. Good afternoon, everybody. Give me a second while I share my presentation slide with you all. So today, what I'm going to do is two parts to my presentation. The first is I'm going to I'll take you through the latest situation in terms of the COVID outbreak, both in mainland China and also globally. And then I'll go through our assessment of the economic effects of this outbreak. Now, obviously, it's a quick, fast evolving situation, and I'll try to give you the most up-to-date assessment as I can. Now, in terms of the economic situation, I think the most important factor to consider at this point in time is that mainland China, which is the epicenter of the outbreak back in January, is actually well on the road to recovery. So there is a positive aspect to what is going on here. Now in mainland China, the new number of confirmed cases continue to be very low. And in some respects, what we have noticed is that the new cases, particularly outside of Hubei province, have largely been imported transmission. So it looks like we have had effectively a halting of local transmissions in China outside of Hubei. And that's a really positive development. And you can see from the chart here, especially the right chart, the number of people that are still remaining infected. So that is everyone who's been infected at any point in time, less those who have sadly died, less those who have recovered, now number less than 10,000 across the whole country. And outside of Hubei province, there are only less than 300 that are left infected. So China has actually managed to largely defeat the virus. Now, of course, this has come at a massive economic cost. China effectively shut down the whole country, and economic activity ground to a halt for the last part of January and pretty much most of February. And we can see that in terms of the economic numbers that are starting to come out. The PMI for both manufacturing and services showed the largest decline since records began. This morning we had industrial production, retail sales, and other data which show a similar picture. And we should not be surprised at the unprecedented declines in economic activity because effectively, as I said earlier, the whole country was shut for a period of time. But there are signs now that things are slowly starting to revive. Restrictions in some areas have slowly been lifting. Businesses are starting to get back and open up, and workers are now given more freedom to move around. So all the migrant workers who went back to their hometowns during Lunar New Year are now able to get back to their place of work, and that all will start to see economic activity getting revived. Even Hubei province itself is starting to ease back some of the restrictions. And you know that the Chinese authorities are getting more confident when we had President Xi Jinping last week actually visiting Wuhan. So that's the sort of positive aspect that we have seen. So China is back on the mode to recovery. Unfortunately, the rest of the world, it's a very, very different story. We have now seen a huge outbreak in several countries, starting off initially in South Korea, and then Iran, and then Italy, and now many parts of Europe are experiencing large outbreaks. And even in the United States, where the case numbers also continue to climb. Now, just to show you how quickly things are evolving, this chart here, which I'm showing you, is of the number of confirmed cases in the rest of the world as of last week, as of Thursday, when I finalized this slide. If I were to update this for the latest numbers, the case count for the rest of the world has surpassed 80,000. In fact, there are more confirmed cases in the rest of the world now than the whole of mainland China. That's how quickly things have progressed. In terms of the number of countries and territories with confirmed cases, when I put together this slide, there were 120. Today, there are over 150 countries and territories that have reported the infection. So this is a very fast and rapid moving situation. For the rest of the world, it looks as if they had been following a similar trajectory to mainland China with roughly about a lag of a month. So mainland China was the first to initially detect this COVID-19, and the initial outbreak occurred in roughly from the 20th of January onwards. Now, of course, mainland China took immediate steps to try and contain the spread. Wuhan province was, Wuhan city and then the wider province was effectively put into lockdown mode on the 23rd of January. And it took a while. The case numbers in China continued to really rise rapidly, but eventually we saw the numbers starting to tail off. Now, for the rest of the world, as you can see from the chart here, the numbers seem to be following a similar trajectory to mainland China. And now, unfortunately, it has surpassed China's case count. And I'm afraid the divergence will only accentuate in the coming weeks, because unlike China, which took steps much earlier on, many other countries are only now beginning to take action. Now, just to give you some perspective on things, when Wuhan went into lockdown mode on the 23rd of January, at that time, the whole of China only reported just over 700 cases. This weekend, we have seen many countries, from Italy to Spain to France, finally going into lockdown mode, when their cases have already surpassed 4,000 to 5,000. So in many respects, the genie has already left the bottle. They are now taking steps. And unfortunately, because they have left it a little bit late, the coming 2 weeks, we'll probably have to brace ourselves for further increases in outbreaks. But at least countries are now starting to take this very seriously, and they're putting measures in place. Now, these measures will obviously hurt economic activity in the near term. We've already seen businesses' activity ground to a halt, and this is likely to persist for a while. Other countries that are yet to seriously enact measures, I suspect, will probably have to follow suit. In particular, Germany looks to still be slightly behind in their response. UK, with already cases over 1,000, definitely seem to be lagging behind. But at least the United States have finally done something over the weekend. Their cases have gone past 2,000. So for the next 2 weeks to maybe 1 to 2 months, effectively, we are in a situation globally which is almost unprecedented. Borders are effectively shut. People are not going to be traveling. Lockdowns or people told to stay at home means domestic demand will be significantly impacted, and they will have massive ramifications through domestic economies and, of course, spillovers into neighboring countries and major trading partners. Now, before I get to the economic impact, I think it's also important to put some perspective on the numbers, particularly around the fatality rate and the recovery rate. I know the numbers that are rapidly rising is quite alarming, and it is alarming. I don't want to sugarcoat things. But at least if we look at the experience in mainland China, which have had much longer history now, we can start to make a few observations about the infections or the people that get infected. First and foremost, if you look at Hubei province, the epicenter, the fatality rate is quite high, over 4%. And the recovery rate so far is just under 80%. So from that perspective, a lot of people who do catch the infection recover eventually. The fatality rate obviously is high and unacceptable, but we have to understand within Hubei province, because so many people were brought down by the infection, the health system was overwhelmed. And this likely contributed to the higher fatality rate that we have seen. In contrast, if you look at the rest of mainland China, outside of Hubei province, the fatality rate is much lower at under 1%. The recovery rate is very impressive, over 90%. And as I said, right now, for the rest of mainland China, the number of people that are still infected number less than 300. So vastly different health outcomes. Again, showing that if the health system can cope and you have good quality health system, most people will recover. Now, in parts of Europe and Italy in particular, part of the reason why the fatality rate is so high, much higher than even in Hubei province, is this has come all of a sudden and the health system is swamped. And this is why they are really struggling. And really, this is the key message, and this is why you have governments all around the world enacting the extreme measures that they had. They are basically trying to close their borders, prevent movement, to slow the spread. Or the terminology that people are using now is flattening the curve. It's all about making sure that you don't have a sudden surge of infections that overwhelm your health system. Because that's the situation where you get very, very bad health outcomes. Through social isolation, through shutting down big events, there's a hope that by slowing down the spread, it at least gives the health system time to cope. Then more people are able to recover. Those, particularly the elderly and those with existing conditions, those that need critical care like ICUs, there's the resources that are enough to go around to help them. And if you look at South Korea, for example, which a few weeks back saw a massive surge, they have been quite successful in flattening the curve. Korea went into red alert, which is the highest alert last month, when case numbers started to rise and gone past 700 before they issued that alert. But since then, and more recently, the number of new cases have really come down. And Hence, what we know is that all these measures are effective. They will eventually start to slow down the spread. But again, as I said, many countries, especially in Europe, unfortunately, left it a little bit late, and they're only now starting to put those measures in place, which means for the next couple of weeks at least, we can still expect the numbers of confirmed cases and unfortunately deaths to continue to rise. Now, in terms of the economic impact, the way we assess this, and I think let's be blunt, it's going to be quite difficult to avoid a global recession now, given that the first quarter we are seeing a largely China-specific economic contraction, which will reverberate through the world. And now with many other countries basically following suit, you're going to have another major decline in economic activity at the tail end of Q1 and the beginning of Q2. So the way we think about the impact is largely through 4 channels. And this is, a very simplified way of looking at it, but I think it's quite useful. You can apply this not only to how you think about the impact on whole economies, but also your individual business as well. So there are 4 channels of impact here. The first one is through the tourism impact. Now that was the first and most immediate impact that we saw when the outbreak first occurred in China, and China basically went into lockdown, and a lot of countries started to put travel restrictions against China. So a sudden massive drop-off in visitors from China, but of course now that is extending to the rest of the world. So there's a massive shock there, a massive hit, and this will hurt economies that are more reliant on the tourism dollar. So there'll be different impacts through this on different economies. The second impact will be through the trade channel. So again, early on with the outbreak, we assess most of the trade impact largely through countries doing business with China, either through reduced demand because Chinese factories were staying idle for longer, or potentially any other supply chain effects. But now that is starting to broaden towards trade impacts as a result of significantly reduced activity in Europe, US, and many other parts of the world. And then you have the third channel, which is the indirect channel, confidence and spillover effects. So this is where, because of what's going on, you have obviously downbeat confidence. Businesses will delay investment, hiring decisions, the heightened sense of uncertainty, financial market impacts, all that will have an effect on economies. And then there is the fourth channel, and this is particularly so for the countries that have been badly hit by the outbreak. So initially it was just China, but now we extend it to Korea, Iran, Italy, Germany, France, many other countries, where the response by their respective governments, particularly those that have gone into lockdown mode, and then the restrictions being imposed by other neighboring countries, all will have huge effects, particularly on their domestic demand. So broadly speaking, these are the four channels that are going to be hitting, unfortunately now all at the same time. And every single economy will feel it to varying degrees. Now within Asia, the first two channels, the tourism one and the trade channel, are probably the ones that are easiest to try and get some kind of quantification. That's because we know which countries are most exposed to tourism. We know for any percentage drop off in tourist numbers, we know roughly what kind of impact that will have on the economy. Similarly, with the trade channel, we know how reliant economies are to exports to drive growth. We know, for example, how reliant they are on selling to China or now Europe or the US. So we can make some assessments in terms of the likely impact on economic activity. So if you look at the tourism, for example, Taiwan doesn't rely that much on tourism. Travel services is only 2.4% of GDP, so reasonably low down. Yes, there's quite a high reliance on Chinese tourists, but generally speaking, we don't expect the Taiwan economy to hit badly from the reduction in tourism. Of course, those that are exposed or reliant on the hospitality sector will be hit, but generally as the whole economy, they are not going to be as badly impacted compared to, say, Thailand, where travel services exports account for 11% of GDP. Now, when it comes to the goods exports, that's a different story. Taiwan, of course, ranks highly, being an export-dependent economy. It has very high exports to GDP ratio, and quite a lot of that is trade with China. But increasingly now, as I said, we have to broaden that assessment to the rest of the world now as well. So these are the, I guess, more easily quantifiable channels. Unfortunately, the other channels, the indirect ones, and the ones where countries are hit, those are much harder to quantify, because here we're talking about quite a lot of unknowns, uncertainties, how businesses respond, how households respond. All those will have varying degrees of impact on economies. Now, fortunately, Taiwan, even though the case numbers still inching slightly higher still, it hasn't been as badly hit compared to many other countries. So Taiwan is not in a complete lockdown, for example. Yes, precautions are being taken. So there will be some indirect impacts, but not to the extent that will be seen by other economies. Now, based on these assessments, we have downgraded our growth forecast for Taiwan. We now expect growth in 2020 to come in at 1.6% now for the full year. And largely the impact is through the various channels I've talked about. Tourism, of course, will be impacted. Production, trade dynamics will be affected. And initially, what was largely a China-specific shock is now broadening towards a much more global one. The tech cycle is also a very important one, particularly for the Taiwan economy. We do expect the tech cycle to be disrupted. Of course, when you have news that Apple, for example, is closing all their stores outside of mainland China for a while, there's going to be significant drop-off in demand, and therefore there's going to have impacts on demand for eventually the tech cycle. So that will also have some implications for Taiwan's economic activity. So far, what we've seen also is the impact through the financial market channel as well. I think this is one area we should not underestimate. So far we have seen the travel impact, the trade impact. We can try and assess that. But the sell-off we're seeing in financial markets, the volatility in financial markets is also another, if you like, indirect channel that will have an impact on all economies as well. So this chart here is just very simply a chart of Taiwan's GDP growth versus our proprietary financial conditions index. So this index is really designed to capture, not necessarily estimate with precision, but just to give us a sense of the direction of growth due to tightenings or easings in financial conditions. Now we can see prior to the outbreak, financial conditions were actually starting to be pretty positive for growth. That was when we had US and China signing a trade deal, equity markets doing well, the tech cycle was looking like it's picking up. All those were factors very much in favor of the Taiwan economy. But all that has now turned around. And as a result, financial conditions have tightened very sharply, and we're anticipating Taiwan growth to slow as well, hence our downgrade to our growth forecast. Now, if you look at the Taiwan dollar is actually held up remarkably well, considering all the volatility that's going on. I think there are a couple of reasons for the resilience of the Taiwan dollar. Taiwan still runs a large current account surplus. That's always a very important buffer for the currency. But as this chart here shows, I believe the global semiconductor sales cycle or tech cycle remains very important for not only the Taiwan economy, but also the Taiwan dollar as well. As long as the tech cycle does not turn down materially, I think it will still be fairly supportive for the Taiwan dollar. And unlike a few years back when Taiwan dollar was coming from a really, really strong level, beyond 30 against the US dollar, this time around, our assessment is that the fair valuation for Taiwan dollar is just about right at the moment, which is why it's not really coming under a lot of pressure. Other currencies that are coming from a more overvalued position, such as the Indian rupee, for example, finding themselves coming under more severe strain. And finally, it's not just Taiwan that we are downgrading our growth forecast. This last slide here from me just shows you what we've been doing for our growth forecast in the region, and we've pretty much been taking quite large downward revisions across the board. We've cut Thailand the most, largely because of its reliance in tourism, and we've also cut our China GDP growth forecast, and you can see pretty much across the board. And in all likelihood, this probably won't be the last. There's probably going to be further downward revisions to come as we continue to assess the latest developments, particularly all the measures that various governments have announced just over the weekend. With activity in many parts of the developed world looking like they are in shutdown mode, even for a brief period of time, that will have massive knock-on effects. And we will be continually assessing and monitoring and making necessary adjustments to our forecast as we go along. So that's it in terms of my formal presentation part. So now I will move on to the Q&A session. So in terms of the questions, give me a second. Okay, so one question is, are we in a deflationary environment? What are the indicators to look out for if we are to enter deflation? I think in the near term, as in coming months, it's very likely that we will see headline inflation going into negative territory. Now, just because your headline inflation goes negative does not mean you're in a deflationary environment, as in the Japanese type experience. I think the negative headline inflation is temporary. Part of that is due to the sharp decline in oil price, which will drag down anything related to energy or oil. But eventually, I believe once we are past the worst of this outbreak, and economic activity starts to revive again sometime in the second half of the year, then we should start to see inflation come back into positive territory. So short answer is no, I don't believe we are in a deflationary environment, as in a persistent Japan-style deflationary environment. Near term, some negative headline inflation, sure, but I expect that to be temporary. So thank you for that question. The next one is, how do you see the impact on oil prices? It's already fallen a lot. Will that help or hinder the near-term economic outlook? Now, the oil price development, particularly in the last week or so, is quite an interesting one. In some respects, the oil price dynamic is slightly different from the COVID-19 outbreak. Now, the initial move down in oil price certainly was due to the outbreak, because with cancellations, people not traveling, demand for oil definitely has gone down. So that was the initial impetus for the move high in oil price. But the more recent sharp slump in oil was due to the inability of OPEC to agree on production cuts. In fact, OPEC is now pretty much engaged in a supply war as well. So the oil price is actually going through a very unusual dynamic, where at the same time, it is being hit by a demand shock, due to what's going on. And it's also being hit by a massive supply shock, with Russia upping their output and Saudi Arabia also looking to pump more oil out. So you can imagine, simple demand supply. When you have reduced demand and you have a massive increase in supply, that's not great for oil price. And I can see oil prices staying low for a while when this dynamic continues to play out. Now, there are always winners and losers in everything. In the case of low oil price, all importers, all users, such as Taiwan, obviously will benefit. You'll see lower oil. If you drive your car, petrol will be much cheaper. So it's a bit like a tax relief, if you like, a bit of a tax cut. So that will be helpful. But of course, for other economies, that will hurt. Those that are net energy exporters, such as Malaysia, obviously Middle East, Saudi will be hurt. The net effect will be, of course, that ultimately, though, it's the broader environment that is more important. So yes, lower oil prices will help at the margin for economies like Taiwan, who are a net oil importer, but overall, it's not enough to offset the negative impact coming from the outbreak and what's going on. So thank you for that question. The next question is there a view on Taiwan airline industry in the short and medium term? So I'm a macroeconomist, not an industry analyst, but I think given what is happening, it's fair to say the outlook for any airline industry or tourism, hospitality in particular, is not looking great in the near term, given the restrictions that have been put up by governments all over the place. And really, this next few weeks, upcoming month, it's going to be very challenging for airlines, for any company which is reliant on travel and tourism. And really, it's the ability for them to make sure there's enough cash flow funding to tie them through. So it will be just extremely, extremely challenging. Now, of course, eventually, once we get past this, once hopefully we are over the peak of the outbreak, and slowly as restrictions get lifted, then activity starts to resume, by what we're seeing now gradually happening in China, then things will rebound again. The question is, when is that going to happen? I think the reality is that given the cases that we have now, and also the fact that a lot of governments, as I said earlier, were quite slow to implement some of these measures, I'm afraid it might take a little while longer before we see restrictions being lifted and resumption of normality, particularly for travel. Next question is, will the Taiwan dollar fall? What about the Australian dollar? I'll address the Aussie dollar first and foremost. Aussie dollar has actually fallen a lot. It's just hovering not far above 61 cents at the moment. What has prevented the Aussie dollar from falling by more so far is because the US Federal Reserve has slashed interest rates not once but twice. They cut initially by 50 basis points, and then just this morning announced a very much surprising 75 basis point rate cut all the way to basically zero and engaging in massive quantitative easing. So that's actually helped to prop up the Aussie dollar slightly. But I think that's only going to be temporary, because this Thursday, the Reserve Bank of Australia said that they're going to make an announcement. And most likely is they will cut interest rates, and who knows, potentially even engage quantitative easing as well. That definitely will be negative for the Aussie dollar. So I won't rule out Aussie eventually falling below 60-cent level, which is something we haven't seen for quite some time. What about the Taiwan dollar? I do expect the Taiwan dollar to weaken slightly. Yes, it has been a lot more resilient compared to other currencies in the region for the reasons I mentioned earlier in my slide presentation. But I don't expect the Taiwan dollar to weaken materially. Again, factors supporting it: strong current account surplus, which Taiwan has. Yes, the surplus will probably reduce given reduced export demand, etc. But still a sizable surplus. Taiwan dollar is not coming from a position where it is overvalued to start with, and as long as the tech cycle doesn't completely collapse, I think that will help to keep Taiwan dollar sort of trading within a range. So my expectation is it will weaken slightly, maybe to 31.5, potentially even 32, but not completely depreciate significantly like what we've seen with other currencies in the region. Thank you for that question. Next question is, will US Treasury yield stabilize shortly? Any suggestion on equity cash allocation? Okay, so I don't give investment advice, so I'll pass on that one in terms of equity and cash and bonds. But in terms of the US Treasury yield, I think I will say this: the Fed has now effectively cut rates to zero. 10-year yield under 1%, even the 30-year yield. It's almost unprecedented. And the Fed is engaging on massive QE again. So that will definitely keep the yield curve, long end of the yield curve, low. And the Fed has committed to keeping rates low until this whole thing is over, which again, it's a big open question about when that is. So I think for now, the US interest rates will stay low. Also, it's not just the Fed. Of course, you got to understand now with additional QE, and there's a lot of money, and there's going to be a lot of flight to safety. And in this environment, ultimately, US Treasury is still the ultimate safe haven. You can say all you want about gold as a safe haven. Ultimately, when it comes to liquidity and this kind of financial market environment, liquidity is at a premium. Gold doesn't offer you that liquidity. In fact, gold has not done very well the last few weeks or so. So ultimately, I think the ultimate safe haven asset is still a US Treasury, and I anticipate still strong demand for that, which will help to keep US yields anchored. I think we have time for just maybe one more last question. When will we see the full impact of COVID-19 on the Chinese economy, and how will this be projected to the rest of the world? I think the worst in terms of the massive decline in activity in China due to COVID is probably past us. Of course, we are now only starting to see the economic data relating to that. So if you think about the Chinese economy, they pretty much shut down late January, and then for most of February. March, this month, slowly they were starting to open up and get back on track. And I believe they will continue to do so and continue to resume more normal levels of activity throughout April and May. But as they are normalizing, unfortunately, they are normalizing at a time when the rest of the world is having to deal with the outbreak. So yes, I think Q1 is when Chinese activity all the numbers that are coming out will be pretty ugly, but we sort of already know that. It's going to show signs of recovery starting from this month onwards. But it's not going to be a full recovery, if you like, as in we're not going to get back to the same level that we dropped off from, because China also has to deal with weaker external demand. So there's no way they can get back to the same level of activity as before. And that's the reality we are faced with at the moment. So yes, I think the worst, as in the massive contraction, is probably behind us, but the recovery is going to be a more slower and gradual process. And of course, how that feeds through to the rest of the world. The rest of the world has already felt a sharp decline in Chinese activity, particularly in tourism. So that's already been felt. Now, unfortunately, we'll be feeling the effects of now the rest of the world taking the measures. And in a way, I think you can think of this as like a double shock. The first shock was China, and now the second shock coming in is the rest of the world responding with about a lag of a month. So that's it from me. I hope you all found it useful. So now I hand back to Alex for closing remarks.
Thanks, Khoon. So on behalf of ANSCHM Taipei, I'd like to thank you again for your time and your insights. I think everyone really appreciates it. And of course, ANZ for the support in organizing the event. Before we end, for our guests, please remember to follow us on our Facebook and our LinkedIn and our Twitter, just to find out the latest information about our upcoming events. We've recorded today's event, so hopefully that will be uploaded later today. And on that note, I'd like to close and thank everyone again for participating.